This is Short Hammer. It is the 14th of November 2019, and we're taking a look at Amazon. Now, Amazon, if you remember our videos from earlier in the week, we were telling you that there was a potential extension either to 1805 or down to the 1756, even the 1747 area. And that's what's happened. So, what we wanted to watch for was a rejection of the 1805s. And once we lost these, let me broaden this out so we can see. Once we rejected and we lost the 1805 area, then we lost the 1798 and 1792. These are strong areas, and I call this going through a bad neighborhood. These are strong areas of supply that have been holding up significantly well ever since the previous earnings. Now, the earnings from the end of October, last earnings back in July. So all these areas are areas of contention. Now, if you're looking at Amazon and you're saying, but this thing has so much room to the upside, it's so compressed, there is no reason why this thing shouldn't rip and run. That might be true. But the people that are investing in Amazon, the big corporations, they've been unwinding their positions. So what you want to watch for on Amazon, just watch our levels. 1756 is the level. 1747 is the bottom of the channel from 1747-ish or the upper 1740s all the way to the 1833s. To break out of this channel, we have to do one of two things: extend above and hold above the 1850s, or extend below and hold below the 1740s. The next channel that we can go in is the lower 1740s by 1705-ish. That's another channel. So we want to keep an eye out on this. These are my supply demand zones. So we lose 1747. There is a potential that we could go down to the 1680s, but we have a bunch of little speed bumps in between. This line you see coming down here, this trend line, was a downtrend line that I drew on Amazon from back in July, and we've just held below this. Look at that. And we're back testing that here. Could this provide support or a demand area? Well, it looks like it did right here. And it's funny that this intersects with the lower portion of our supply demand zone at the 1747s or upper 1740s. And the 1756 is the swing door. Above this, I'm a little bit more bullish, below a little bit more bearish. But right now I am a little more bearish, I'd say. And don't look at these prices because these are Heikin-Ashi candles. The prices are slightly off. Let's go over to our 5-minute chart. If you look at our 5-minute chart, what we want to watch for tomorrow is this. Courtesy of power of pivots, the main intraday pivot is up here around 1758.70. I'm kind of watching that, but what I'm really watching is I'm kind of sure, not 100%, that we might get through this 1756 area. So what I'm going to watch for is the previous day's candle consolidation or candle interactions here, where we just rolled along the 1760s for all this period of time. So a push up into this area, and it's also the top of my supply demand zone. So I would love a push up into that area to look to enter a potential short position with my, let me now turn this candle a different color, with my stop being a hold above the 1762s. And depending upon the market trend for tomorrow, I might actually give this up until the 1768s, and I might average there for a potential pullback. So we'll see how Amazon shakes out, but that's what I'm watching for tomorrow. And if we go up and test these 1762s or this upper area here, and we come down and we lose the 1756s, then I'm going to be watching for the upper 1740s as the next area of support or demand, I should say, and a potential for us to roll through that into the lower 1740s. And once we're into the lower 1740s, it can open up room lower. If they buy us up and we have some sort of PR press release from China or from the White House and we go above this and we pop the 1768s and hold, then I'm going to look to get long here. But we have to watch the overhead, the 1772s, then the 1776s. So this can all be interesting tomorrow. And yes, we can go either way, but I'm leaning towards more downside just because at the higher levels, there was no oxygen. The buyers had no appetite to continue to buy and push Amazon up. So could they say, hey, up here, I know we don't have any buyers. So could they say down here that they're buyers and sort of bounces back and forth in between? We'll see. But I think with the uncertainty around trade, that people may not be inclined to heavily begin investing in a ticker like Amazon just based on the current market climate and where there are other tickers where you may be able to find a greater bang for your buck. So we'll see. And I'm not predicting the future. I'm just going to use these technicals and these setups and these prior levels as a way to be able to take my trades intraday on Amazon. So I'd watch these levels that I mentioned earlier and see if they hold or if we retrace. But for me, a push up into the lower 1760s, I'm short. And if it gets above this and holds, then I'll exit the trade and I'll look for my next position to take. But I think that's a high probability, low risk trade. The only thing that would trade that would be if we open and we're under different market conditions at the open than we were at the close. So that means if something news has come out that has changed the perception of trade, or something else has come out that's changed the perception, and the market is somehow trending bullish, at that point is when I would look for a potential long position. But it'll be more of a long scalp position and not a long and kind of ride it down or ride it up position if we popped, held, and we're going long. If you like this video, please go down and click the like button. Don't hesitate to subscribe to Power of Pivots. Our YouTube channel definitely has a lot of background information that can really help you in executing your trades.